it is official. The US has bombed Iran, and obviously that is very terrible and very horrible, but we need to find out what is going to happen in the market and what are the stocks that are going to be affected by this, event. So, obviously, the main three that come into everybody's mind will be, defense stocks like Lockheed Martin, Northrop Grumman, and Raytheon. And so today we're just going to take a look at these three, compare them and figure out, is it a good time to be investing in it before anything major happens? And yeah, so first of all, look at the chart really quick. This is just a chart of all three of them compared to the S&P 500 over the past year. And as you can see, one of them definitely significantly destroys the other. So RTX has gone up almost 40% in the past year compared to the S&P 500, which is in blue, as you can see, as 8%. So yeah, and also Northrop Grumman has done almost 15%, but Lockheed Martin has been definitely the laggard. As you can see, it's been almost negative for most of this year, and it's just barely up almost 1%. So, it's looking like these are beating the S&P 500, and maybe it's a good time to be investing. So, I just want to show you guys, first of all, before we get into everything, let's just look at their revenue. What are the sizes of each? Obviously, Lockheed Martin. All right, so obviously, they're not growing super, a lot like other growth stocks. I wouldn't say any of these defense stocks are really growth stocks. Maybe some people would consider it those. But, think about it. These defense stocks, they make money through contracts, right? Through contracts and getting deals with the US military and other countries, right? Like, they're not just going to have some, guy who's going to go and buy a fighter jet. You can't really do that. That's obviously illegal. So these guys really make money during times of war and just times when, where our tax money goes towards. So as you can see, not too much growth in these stocks as you can look at the total revenue over the quarters. Let's quickly look at some other ones. RTX, pretty similar story. As you can see, like 21 billion, 20 billion, 20 billion, 19 billion. But, during times of war, you're going to see these spike up, right? But on an annual basis, it does look like they have been growing this year especially. And let's just check also Northrop Grumman. Just check what's going on with them. It's probably the same story. Yeah, as you can see, it's like 10 billion, 9 billion, same thing. The next thing I look at is like the valuation. So this is for Lockheed Martin. The trailing PE is actually not that high. Right now we're at a 20 and forward PE of 17 compared to Raytheon, which has a trailing PE of 43. And we have Northrop, which is at a 19. So I would say Lockheed Martin and Northrop definitely undervalued, or at least pretty low valued. And if we look at the chart, it'll make sense why. You see Lockheed Martin has definitely suffered a pretty big fall, but you can see during times when there's been war, right? For example, October 7th, right? The thing, Israel and Gaza, it was right around here in 2023. Boom, spike up here. Probably for some other thing in the Middle East. Usually it's the Middle East. If you haven't realized, we haven't really gone to war with like Germany in a while. So, but as you can see, like RTX has been on a really big run actually. So they've been doing great. It's looking like they're hitting their numbers every single time. Maybe is Lockheed Martin not doing that every single time? Let's see. Yeah, it doesn't look like they're as consistent. Just check Northrop Grumman really quick just to see. They're pretty volatile. No specific direction they're going in. So out of the three, RTX has definitely been on a really big run. But yeah, as you can see, price to sales, Raytheon and Northrop Grumman and Lockheed Martin, they're all fairly low. Definitely Raytheon has the highest. As you can see, like the price is the highest. But if you look at the forward PE, it kind of tells the story. I feel like the price to earnings right now, that's just because of the price is really high. But the forward PE by, analyst, it seems pretty legit. So none of them are super, super overvalued. Next, I want to look at the gross margin. What are these guys doing? Obviously, I just made a video about social media platforms like Reddit and Meta, and their gross margins are in like the 90%, 80%, 90%. Whereas these guys, they're down in like, damn, like Lockheed Martin is at 10%. Like that is like pretty bad. Like for your margins to be at 10%, that's pretty bad. But for companies like these, obviously that's how it works. These guys are paid on contracts, and they're not, they're not trying to make like a super big profit, right? Because think about it, they're working with the U.S. government. Also, they have the most expensive products, right? Intrinsically, compared to like a McDonald's or some other companies, their product is like physically like the most expensive compared to any other company, right? They're building like missiles and jets and like guns and like all these things. Like this is the most expensive, industry. So, but as you can see, Northrop Grumman and RTX have been pretty good compared to Lockheed Martin. So this is like something I really like to see. And yeah, so cost of goods as well. This is really important, and this actually relates to the last slide. As you can see, their cost of goods for Lockheed Martin has been significantly growing, but their gross margin is still going down. So that's bad. You don't want to see that. Whereas RTX, their cost of goods is getting higher, but their gross margin is still, it's still fairly good compared to the competitors. But the best one by far is Northrop Grumman, where their cost of goods is not as high as the other companies, and their gross margins are beating the competitors. So that's what you want to see. You want to see that they're spending less and they're taking more home at the end of the day. So that's what you want to see. So Northrop Grumman so far is looking pretty good. As you can see, analyst ratings for Lockheed Martin, damn, they have a way higher than the current price. But I think that's also because the price has just been beaten down. Like the price of Lockheed Martin has just been beaten down, like for some reason. No, not really too many strong buys, but not really any sells. So it's kind of just like their analysts are saying to hold it. And yeah, pretty much same. RTX pretty similar too. Analyst price target just a little bit lower, but I think that's just because the price has just been going insane. I honestly can't really explain what's the big deal between the RTX price going insane and not Lockheed Martin. And then Northrop Grumman, I think Northrop is the same thing as like Lockheed Martin. Also, the price target's way higher because the price of Northrop Grumman has declined. So next I want to look at what is the news going on behind these companies. Mainly though, I want to look at RTX because there's not really too much insane news going around the other two. But as you can see, these three, high caliber defense stocks in a dangerous market. Basically, they wrote here, they said, while we all hope for a peaceful resolution to the escalating tensions between Israel and Iran, far more important than market movements. Like they had to include this little part here where they're like, it's far more important than market movements, the actual war. The conflict serves as a stark reminder of the strategic value of defense stocks. So they have to end it by saying, although we have this war, we have to focus on the strategic value of the defense stocks. So that's kind of the point of this video too. But as you can see, RTX, right, as I was saying earlier with like the contracts, recently they've been doing pretty big contracts with the U.S. Army, obviously. But I saw this one. Actually, maybe this is not even the U.S. Army. RTX's ARM secures $300 million contract for ESSMs. I don't know, something with contracts. And here's the main one. They just did like a $1.1 billion contract with the U.S. Navy. So that's pretty awesome. And, it's probably going to just keep going up and up and up. So, and not even just because they'll do more contracts or more in revenue, but people will see the war. Retail investors will see that we're going through a war, and they will want to probably start buying these stocks and future hopes that they're just gonna just do better. Yeah, for example, as I was like kind of mentioning, if you look at times like 2001, right? September 11th, like you could see big jumps in these stocks. Obviously, it doesn't look too big from here because the price has significantly increased, but it was a pretty big jump back then. Let's see, it was like, yeah, like the stock jumps like 20% in a day because of like war tensions. What about RTX? Actually, for some reason, I'm looking at RTX chart, and on September 11th, the stock actually dropped. So I don't even know. So sometimes I guess it's, even though there's war tensions, it might not even be the best idea to buy the stock because maybe, anyways, retail investors are never going to be fully rational. So you should never trust, that they're going to be buying just because some event is happening and it would make sense for them to buy, because obviously, the stock market doesn't usually make sense. But in conclusion, I just thought about this, and in previous wars, we never really had to think about any other company than the defense sector. But now another company that we should be, have on our radar now that we're, kind of, there's war tensions, is, think about it, what do you think? It's Palantir. And Palantir, obviously people think of it as the AI company to make other companies more efficient and help with, managing the data sets and all this stuff. But one of their big things is they are like partners with the US military, and they want to help with the defense of, America. I don't know how it works with the AI. I have no idea, but they want to like make the military more efficient. So I was actually just looking at this, and the Palantir shareholder letter, the recent one, he says, our intent in arming the United States of America and ensuring that its defense and intelligence agencies had software capabilities that were more lethal and precise than those of its adversaries. An aim that should be uncontroversial and nearly uninteresting was for years dismissed as politically fraught. Oh, okay. But like, as you can see, one of the main parts that he always talks about in his letters is about war and how they're helping the US military. And yeah, like I don't know. I honestly don't know how the AI works for the military, but they make around half of their revenue just from the US. So like just from the US government and the military. So that's pretty interesting. And don't be surprised if you see Palantir stock also jump on Monday, Tuesday, Wednesday. So pretty excited to see that. Palantir's already super duper like high. So like it's insane. Like the valuation on Palantir is like it's the definition of like a bubble. So I've already sold half of my shares anyways, but I still own like a few. Anyways, thank you so much for watching. Let me know if you're going to buy any of these stocks on Monday or anytime this week. Personally, I don't think it's a safe investment. I don't think you should be buying just because of, a war. And I really don't see too much growth in these companies whatsoever, in my opinion. I think these are like the definition of like cyclical. Realistically, they only make a lot of money during times of war. And yeah, so let me know what you think in the comments, and I'll see you.